Welcome to my channel, where I share my expertise on personal finance and investing. In this series of videos, I'll be showing you how to make smart financial decisions that can help you grow your wealth and secure your financial future. Whether you're a beginner just starting to learn about money management or an experienced investor looking for new strategies, you'll find valuable information and insights here. So sit back, relax, and join me on this journey to financial freedom. Let's make money together. Welcome to this video on exchange-traded funds, or ETFs. ETFs are a popular and versatile investment option that can provide investors with exposure to a wide range of markets, sectors, and asset classes. In this video, I'll be discussing the basics of what ETFs are, how they work, and strategies for picking the right ETF for your investment portfolio. First, let's start with the basics of what ETFs are. ETFs are a type of investment fund that is traded on stock exchanges, just like stocks. They can hold a variety of assets, such as stocks, bonds, commodities, or a combination of these. The assets held in the ETF are chosen to align with a specific index or benchmark. This means that ETFs can provide investors with exposure to a variety of markets, sectors and asset classes, depending on the ETF in question. The way ETFs work is quite simple. ETFs are managed by investment companies, which create and issue shares in the ETF. These shares represent a proportionate stake in the underlying assets held in the ETF. Investors can then buy and sell shares of the ETF on a stock exchange, just like they would with stocks. The value of the ETF is determined by the value of the underlying assets it holds, and it can be bought and sold throughout the trading day. One of the biggest advantages of ETFs is their diversity. When you buy shares in an ETF, you're buying a piece of a portfolio that holds multiple assets. This can help to reduce risk, as it allows you to spread your investment across different sectors and markets. Additionally, ETFs are generally more cost-effective than traditional mutual funds, as they typically have lower expense ratios. This means that more of the money you invest goes towards buying the assets held in the ETF, rather than being lost to management fees. Another benefit of ETFs is their flexibility. They can be bought and sold throughout the trading day, just like stocks. This allows you to take advantage of market fluctuations, and make adjustments to your portfolio as needed. This is particularly useful for investors who are looking to take a more active approach to their investments, as they can quickly and easily make changes to their portfolio as market conditions change. Now that we've discussed the basics of what ETFs are and how they work, let's talk about how to pick the right ETF for your investment portfolio. The first step is to define your investment goals and risk tolerance. Are you looking for long-term growth, income, or a balance of both? How much risk are you willing to take on? This will help you to narrow down the types of ETFs that align with your goals and risk tolerance. Next, research ETFs that align with your investment goals. Look for ETFs that track specific indexes or benchmarks, such as the S&P 500 or the MSCI World Index. You can also consider ETFs that focus on specific sectors or geographic regions. It's important to consider the assets held in the ETF, the expense ratio, and the historical performance of the ETF. This will help you to make an informed decision about which ETFs to invest in. Another important factor to consider when picking an ETF is the liquidity of the ETF. Liquidity refers to the ease with which an ETF can be bought or sold without affecting the price of the ETF. ETFs with high liquidity tend to have narrower bid-ask spreads, which means that the difference between the price at which you can buy the ETF and the price at which you can sell the ETF is smaller. This can result in lower trading costs for investors. Finally, it's important to diversify your ETF portfolio. This means that instead of putting all your eggs in one basket, you should spread your investments across different sectors and markets. This can help to reduce risk, as it allows you to spread your investment across different types of assets. Additionally, it's important to regularly review and rebalance your ETF portfolio to ensure that it aligns with your investment goals and risk tolerance. In summary, ETFs are a popular and versatile investment option that can provide investors with exposure to a wide range of markets, sectors, and asset classes. They offer diversity, flexibility, and cost-effectiveness. To get started with ETFs, it's important to define your investment goals and risk tolerance, research ETFs that align with your goals, consider the liquidity of the ETF, and diversify your ETF portfolio. I hope you found this video informative and that it has provided you with valuable insights on ETFs. As always, it's important to do your own research and consult with a financial advisor before making any investment decisions. Thank you for watching, and don't forget to subscribe for more videos on personal finance and investing.